Welcome back to Market Close. Those of you just joining us, before going on to a break, we're talking to H.M. Shahzad about the premium issue which has once again been seen in local manufactured cars. Now, he said that the people to be blamed for this particular problem are the local manufacturers themselves, and we tend to agree with them as well, because based on the scenario and looking at the utilization figures, the local car manufacturers are not producing as per their capacity. They have a lot of room to produce more cars, but based on the fact that this demand has surged right now, they aren't fulfilling the demand of local consumers, and we will be trying to get hold of the local car manufacturers as well in the coming shows as well to get their view on this problem as well, and we surely will be updating you on that particular problem as well. The only solution, which according to importers of cars, the duty slab should be brought down once again, that this premium issue could be reduced as far as car prices is concerned. Also, before the break, we were talking about the FBR withholding tax statement, and they did say that the withholding tax is not double taxation as far as that on the Karachi stock market is concerned. So Suhail Ahmed, the chairman of FBR, did speak officially to DawnNews. Let's hear in as to what he had to say.
We are consulting the law ministry and seeing, whether it requires going back to the,
no double taxation should be imposed.
It's not double taxation, let me clarify, but, you can call it double taxation. There is a distinction. But I have said that, we are looking at it and it is likely to be reversed. The distinction is, let me make clear the distinction. One is a tax on the capital gains people make by selling, buying shares. See? And one, the new tax which we have imposed is on the fee that, the stockbrokers charge from these members for trading. So, it's a fee on that charge, and the other is the money that is made in selling and buying. So, but if some people say it is double taxation, fine. We have accepted it that, okay, if it puts a dampener on trading in stock exchange.
Suhail Ahmed there, the chairman of the FBR, commenting on the withholding tax on sale and purchase of shares, which has basically been imposed on the fee which brokers charge to their clients. Now, Taha, that is as far as the local economy is concerned, but commenting and looking at the impact of the global financial crisis which hit the world economy in the last year. Now, different experts are looking at different areas in which this global crisis had an impact. One of the sectors which was affected as well was the health sector of the overall globe, and as a result, different experts are saying that world health has dropped by close to 11% on account of this problem alone.
Definitely, world wealth overall in the global market has dropped by 11%, which is a huge concern because recession, which started in the latter part of 2007, it is still continuing despite different economies slightly coming out of this recessionary phase. But the overall wealth from the global economy has eroded by almost 11%. Now, it has come down to $92 trillion, and almost 3 years back or 4 years back, it was at plus more than $272 trillion. So falling from that level to almost $92 trillion completely indicates the fact how much of this world wealth has completely eroded from the global surface. But any stability in the world wealth, according to economists, top economists, they're saying any stability coming in will take almost 6 years to go back to that level where it was almost 3 years back. And obviously assets were completely eroded. Financial books of different companies, we saw the likes of companies like Lehman Brothers, Merrill Lynch completely wiped out from the global markets. And this was entirely because of the hit that the U.S. equities started to take in the year 2008 and early 2009, and also hit hard was Switzerland and the Caribbeans, where assets declined by almost 8% as the number of millionaires now worldwide also shrank by 17.8%. North America, particularly the United States, was the hardest hit region, and reporting a 21.8% decline in wealth firms' assets under management to $29.3 trillion. In this global downturn has not only slowed down investment, but another huge concern was that it had completely shattered the investors' confidence level in the global market, and people who were putting in FDI, foreign direct investment, coming to different countries that had started to post negative numbers. We saw the likes of China, Japan posting negative investment numbers, and also Pakistan was no different. Pakistan also saw the brunt of this ongoing recession and this economic meltdown. So the world wealth dropping more than 11% is a huge concern for the economic managers of most of the developed and the developing nations. And as I mentioned, economists are now predicting that going back to that level is going to take almost 6 years now for the world market.
True, and stability, in returning of stability, it will take about another 8 to 9 months as well before the equity markets and all other arenas of the economy also start picking up. But the recovery path has started. It will take some time, but nonetheless, one can be sure that things are on the better note, and going forward, things should further be improving, not only in Pakistan, but the entire world economy as an overall analysis. That's about all from today's market close. The third trading session of the market closing on a positive note for those who are just joining us. 107 points positive was the KSE 100 index today, closing at a level of 9,137 points. That's about all from market close for today. You're more than welcome to write to us at takestock@dawnnews.tv for any suggestions or feedback. Till tomorrow morning, from me, Zain Sohrawardi.
From me, Taha Siddiqui, and the rest of the market close team, take care and enjoy your day.